Phone maker Nokia.
Yeah, once the world's biggest mobile phone maker, Nokia has sold its mobile division to Microsoft for €5.44 billion. The deal will see almost half of Nokia's worldwide 56,000 staff transfer to Microsoft. Nokia has been struggling in the face of increased competition, particularly in the smartphone market from the likes of Apple and Samsung. Investors certainly pleased at the news. Shares in Nokia up over 47% in trading so far this morning. Siobhan Silk has more.
It ruled the pre-smartphone era, but after a roller coaster decade, Nokia will no longer be making mobile phones. The Finnish company is selling its mobile device unit to Microsoft in an all-cash deal worth €5.44 billion. Nokia came late to the smartphone market and has struggled to make headway. It remains one of the world's biggest makers of low-end phones, but sales have dropped precipitously. Its second quarter figures this year are down 24%, leaving it with losses of €227 million for the quarter. By abandoning phones, it will refocus on infrastructure and services.
Following this transaction, Nokia's financial situation is expected to be significantly stronger and its earnings profile significantly improved.
As for Microsoft, like Nokia, it's trailed Samsung and Apple in smartphone sales. It hopes the acquisition will strengthen its place in the market and let it chip away at their lead. Over 30,000 Nokia employees are expected to transfer to Microsoft. One of those is CEO Stephen Elop. He's to head Microsoft's mobile division. It's a return to his own company. He once led Microsoft's business division and is fueling speculation that he's the anointed successor of current Microsoft boss Steve Ballmer, who's due to step down in the next year.
It's all about phones at the moment. If you were with us yesterday morning, we were talking about the prospect, of course, of Vodafone selling its stake in the US carrier Verizon. That's gone through, hasn't it? So what now?
Yeah, one of the biggest corporate deals in history, $130 billion. Verizon sold its stake, or rather, Verizon is paying Vodafone now for its 45% stake in the business. For shareholders in the UK telecoms giant, it's going to be a massive windfall. Let's just see how that $130 billion breaks down. Over 71% of it will go to shareholders, 24 billion of that, 59 billion cash payment. Those 60 billion in Verizon shares will go to, adding up to a total of 130 billion. It's worth pointing out as well that to buy this stake from Vodafone, Verizon has had to take out the biggest loan in history as well, a bridging loan of $60 billion.
What about Vodafone's shares? How are they doing?
Investors not this morning massively impressed. Vodafone's share price has been gathering over the past couple of days, but it's down 1.2%, or it opened down 1.2% in trading in London this morning. A broadly positive picture across the European markets, just Paris's CAC 40 slightly in the red there. Interestingly to note that Alcatel-Lucent, the French telecoms maker, also shares there up 6% after that news on Nokia, so it's having a knock-on effect in the rest of the market as well. Over in Asia, upbeat economic data from the manufacturing sectors in China and Europe pushing the shares there into the green. As you can see, Japan's Nikkei up almost 3%, and on the Nikkei, TEPCO, the operator of the Fukushima nuclear plant, their shares up over 4% after we heard from the Japanese government about their plan to stop the leaks at the damaged plant. Let's move on now with some of the day's other business stories. And the world's largest gas company, Gazprom, says its net profit rose by 5% in the first quarter of the year to $11.4 billion. The Russian state-controlled company says the boost was driven by a 19% increase in sales. Just last week, EU regulators said they were drafting a complaint against Gazprom for abusing its dominant position in the market.
3 senior design executives at the smartphone maker HTC have been arrested on suspicion of leaking trade secrets from the company. Now, they were also accused of making false commission claims worth around $220,000. The arrest came following a complaint made by HTC last month.
And Yahoo has shut down its Chinese website, redirecting users instead to Taobao's site owned by its partner, the Alibaba Group. A message posted on the site says the closure is part of an agreement made with Alibaba last year. Yahoo owns 24% of the Chinese group.
Now, finally, one of Ireland's failed banks trying to recoup some of its money, not from its customers. It's a bit different, this. They're selling some of the artwork.
Yeah, Anglo-Irish Bank is thought of as the bank that brought down the Irish economy. Bailing it out is costing Irish taxpayers around €30 billion, by far the biggest of any of the banks in Ireland. Now, Anglo-Irish itself is being wound up, and the company that's doing that is selling off the assets. That includes 134 artworks they're hoping will raise around €200,000. You can see some of them there. They're all by contemporary Irish artists in the greatest degree, and the auction house Adams is saying that it's not just a lot of interest from art lovers, but also from people who want souvenirs of a particular part of modern Irish history.
Every little bit helps, I suppose. Stephen Carroll, thanks a lot, Stephen, with business here on France 24. Now we're going to turn our attention to the international